right. Good morning. Good morning. It is 6:32. It is December 19th. I hope everyone's feeling well. Wow, what a day, huh, guys? Um, it's interesting. I've been doing this for 30 plus years, and I've been through so many days like yesterday. And the only thing you could do is look back and look at the charts and look at the levels, and then look at your positions and look at what you did right, what you did wrong. How could you have saved money? How could you have made money? How could you have been opportunistic? Did you follow your rules? Did you follow your process? And it's just so easy to see the next day when you look back, like, oh my God, all I had to do is sell it here and short it there. All I had to do is, wait for this level versus no man's land. All those things that go through your mind, either the night of or the day after. And then what you do is you just write them down and you learn from it, and then you move on. Okay. At this point, yesterday's behind us. The trade changed. There was a lot of complacency out there. There was a lot of battlegrounds. Like, the conversation was, will with the poor AD lines, where they were selling everything but keeping some Mag 7 up and this and that, and like kind of hypnotizing, who is going to win? Was tech going to hold up, and were we going to be in some kind of cruise control into year end, or was the underlying weakness going to roll us over with tech pulling back and breaking key levels? And although everyone kind of knew the Fed would be hawkish, sometimes, what was that movie, Reality Bites? The reality of the situation is, when the S&P is up 26, 27%, you can't have an accommodating Fed. You can't have a Fed that's going to say, hey, I'm going to cut 100 basis points, next year, when the S&P in 2 years, what we're up like 40 something percent. So the only way the Fed gets accommodative is if all of a sudden you get in a corrective stage, sentiment gets poor, and then all of a sudden, like, oh, now we can cut because the market's taking rates lower. And they say that they don't watch the market, but they do. It is what it is. Now, if you look here at the chart of the SPYs, you look back, and I post these sell rules all the time, and some people are like, Red Dog, it's after the fact. I'm like, it's not after the fact, okay? I've been posting these sell rules for a decade. So if you go back to here, okay, to the sell rules, right? That's my rise and grind. People are like, why do you post the same picture every day? You're not unique or creative. I'm like, because this is what I do every day. This is what I post every day, to remind you that every day you're rising, you're grinding, you're getting your day going, so you can think clearly, so you can execute on the X's and O's. That's the Red Dog mindset, by the way, which you're going to learn and be a part of next year. But anyway, I post these. Okay, where is it? Just to print out. Where is, here you go. People are like, why do you always put that on a bad day? I'm like, I put this on a bad day because I want you to remember that there are different sell rules. One, you sell into strength, right? You sell into strength so you could book profits when you can. Take profits when you can. That's why when a gap's in our favor, we're always trying to net money. That's one thing. Sell when it doesn't hold the prior high, because that means it's not in the motion of the move. So in order to go from 7 to 10, it's got to get above 7, stay above 7, and get to 10. So the same way, in order to get above the prior day and continue, it's got to stay above that. So if it doesn't, and you added for momentum shares, you got to get out of the way. Then there's another technical term, when it goes red, okay, boom, that it can do anything. And then the trade really changes below a prior day's low. That's what you call an outside day. That means it really changed. So there are 4 ways to adjust your process in the motion, in the move, besides overlaying levels and everything else. So anyway, that's why I always post this printed out. It's just a way to adjust and keep yourself safe and sound. You could actually Google it. I've been posting this for 10 years, not just during a day like yesterday or on a bad day. Okay. So anyway, so that was with this, and that was when we weren't even at here. So this was yesterday during the day. I'm like, we had a Red Dog reversal where it went above a prior high, didn't hold it, and then took out 602.80. So right there, that was the level. We took out the 21-day. Thousands of times I've written ebooks about it. When you're below the 8 and 21-day, you have to adjust. You're no longer in the same type of trend which we've had. And then I said to myself, hey, you know what? Maybe we hold 591, which would be the 50-day. So that's when I had my major loss yesterday. I started buying a little bit ahead of 591. It blew through 591, went to 585, went down another 5 points. I had way too much SPYs, and I wanted to instead of making and being at the highs of my year, I lost a bunch, which keeps me honest anyway. I deserve to lose some money. I was been in 20, 25 positions literally for, since September 11th, pretty much. So here we go. Let's go back to where we were. Hey, there you are on the 630 club. Hopefully you guys are finding value here. I'm helping you with your process and getting you ready for the day. But anyway, let's go back to the charts. So anyway, oh, charts are gone. So let me put it back up. This is my friend's Trend Spider, by the way. I will be doing a webinar with Trend Spider today at 2:30. They're going to teach me how to use some of my feel with some of their analytics and some of their proprietary sifters and this and that. But anyway, so I posted that we were right here, and then we blew through 591, went to 585, and wow, what a move. Okay, so always read the language, because the language kind of tells you what happened, and then you always look back. So now I approached today with so much less on. So I'm okay with that. The trade changed. I'll move forward. Some people are like, oh, well, just buy the dip. Well, you don't know where this dip's going. Okay, if you trade for a living and it's December 19th, you're like, I'm just going to buy the close. You could have downside follow through. Last night, the SPYs are trading at 583. There, and then you have a gap down to the 100-day. Nvidia bounced off the 100-day. Key stocks went to the 100-day. So if you're just buying this because buy the dip, that's the way you do it for 100 years. Okay, but you could have continued to buy the dip, lost a lot of money, and who knows if we were going to bounce here. So what am I thinking now? Okay, so here is the SPYs. Okay, you're getting a bit of a bounce back. Oops, so let's go back to there. So it's up 260. All right. Oh, why does it keep disappearing on me? Let's get back to here. Let's move this higher. There you go. There you go. Okay, so bottom line is, you're bouncing up 270. So we're up a little bit. So now you use retracement rules. I posted those cheat sheets to retracement rules to figure out how much control does this candle have? Meaning, what type of bounce are we going to have? Was this the get all the fluff out, get all the complacency out, get everyone negative, and then all of a sudden we rebuild and we grind back higher into the end of the year? Or does the rally get sold for continuation to the down move? So the question is, what type of bounce back do we have? So if right now we bounce to 591, which is another $2 from here, well, if you overlay your retracement, that's probably a 0.382% retracement. I'm not going to do that right now, but that would be a pretty feeble rally if we get here and then go red. If we get here, pause a little bit, and then push up a little bit, then you really have 596. So 596 was probably about 50% of this move, or a little less. That would be where, if the sellers want a continuation move to the downside into the end of the year, they probably don't let the bulls retrace and reclaim 596. So in my head, I'm putting out, plan A, B, and C. So one plan is maybe it gets to 5. And if you went home long because you took things on the close, I was talking to my friend Petey. A lot of people said, hey, this is extreme. I'm taking things out on the lows, or they bought it after hours. Then at least you trim some when this is up in your favor. When this is up 260, you trim a little bit, but you don't just short right here. Some guys are, I'm going to short the open. The trades change. We're going lower. We're going to be at least at 576. But if you short 589, which is really no man's land, it could go 2 points more in your face. And then you're like, okay, then all of a sudden it pushes through. You're like, wow, I just lost 10, 15 grand, and get out of the way. And then 11:30, it reverses. So you have to figure out, how involved you want to be. So to me, again, this 591, 596 are two levels that I'm going to be watching. That, hey, if you play a bounce, maybe there's room to there, but make sure you're not buying there. And if you're looking to retrace or short a bounce, these are two spots. The best scenario would have been if we were opening in the hole a little bit. You could buy Versa 5 15-minute low in the hole, Versa level, so your risk is defined, and then you see where we could bounce to, and you make some money. So at this point, those are your levels. Here's the low. Here is where it could potentially bounce back and get rejected, and then this would be a big line in the sand moving forward. And then the Qs, weren't as weak, but it's very similar. If you got out of the way, here was your inside day. That's a doji. Okay, a doji is a great small candle that once you see, if you get above or below, it helps with the direction, which could have helped you yesterday. And we've broke 534. So if you were playing for a bull flag continuation pattern that changed, meaning that idea and that reason you were in a long for tech to continue changed, so you get out of the trade. Some people are like, Red Dog, where do you put your stops? I'm like, well, when the trade changes, you put your stops there. And then, broke the 8-day, came all the way into literally, the prior high here. So 515 is out low. So this is your point of reference now. The 50 days all the way down here, kind of similar, the same thing. Like, where does it reject price? And I would think the Qs will probably be a better spot to focus on than the SPYs or the diamonds because there's more liquidity. A lot of these names have buyback programs for December still. So when everyone goes on vacation, you want to stick to, if you want to be long, things that have mechanical buying. So I would say, here you could also go to the Qs. So you go to the Qs and you overlay something else even. Sorry, hold on. This is SPYs, so let's put the Qs. Qs are right here. They're only up 2, not a whole lot. You could probably then take, hold on, you could probably take the intraday from the other day. Let's see, here are the Qs. Like this, you go to the intraday to see where, where resistance is. So I would say, here on this bounce back, if the bears want to have some control, they probably don't let the bulls reclaim, 524. And this is where the bounce was yesterday. Where's hold on, where's the Qs? Let's go to Qs. Qs again are right here. Qs are at 518. So that this is where it bounced back in the afternoon before coming to the low. So this is really 521. So there's probably room to 521. And then this 524 is kind of like the same thing for the SPYs at 596. So you kind of want to overlay things. I will say that there, you have to also just respect small wins, and at least ways in your process that you lost less. Like sometimes losing less is winning. So I was on with Liz Clayman, and I was like, you know what, I'm going to buy some diamond calls just in case we hold this trend line. And guess what? I bought diamond calls for $1.70. News came out. They were very hawkish. I'm like, this isn't going to work. I sold them for $1.30, but my risk was premium paid. I didn't do what I did with the SPYs at the end of the day. So this whole day was not a big deal. I lost 40 cents. I tried it. But what you can learn from this is that a lot of things are kind of looking to bounce off of trend lines. And if the Dow could break a trend line like this, don't have a false sense of security that you could buy things on a trend line and they're just going to work because it worked all year. Those things can change. So anyway, pretty big move. And now, so the diamonds are down at the 100-day. The SPYs aren't, the Qs aren't even at the 50-day. And the SPYs are just through the 50-day. So you got to see what's happening where. So Tesla, for instance, is still one of the strongest names. It's only at the 8-day. I have to say, if I was to give myself some props, on this day, I told you guys I was shorting in the 630 club with you, not we're at the premium. I said I am shorting the 510 calls and the 530 calls and buying the TSLQ to hedge my small leftover Tesla long. So yesterday I made a lot of money in Tesla, actually to the downside. Yay, Redler caught a short. Anyway, not bragging. I'm just saying it was really extended. So that was easier to see than the range breaking. But anyway, this broke 457. That could have been your out. It went as low as 427. And now what? Some people are like, hey, look at Tesla. It's up 11. Okay. Bottom line is, 457 would be a spot that if you're like, hey, I got stopped out here, or maybe look at this red dog reversal sell. It went above 484, went to 48 and failed. That could have been your out. If you sold up here or sold when it broke, and bought the close, which a lot of people probably didn't do. Even I didn't do that. Now on a bounce, like where could I short? Like, because things change, they want to short a bounce now, which could be the way to do it. So I would say this is 457. That's probably a spot. You could move this down to here on this. So this is on the what's it called? On your intraday, it could be 457. This actually is a little bit higher, so that would be the zone that if you were playing a bounce, you probably want to sell into it. And if you're thinking that anybody who didn't sell yesterday, who is jumping out of their skin, might want to sell into some strength, then potentially this could be your spot to take some off. So that will be something that if you're day trading, maybe you could short into 457 to see if it rolls over. If it takes back 457 and all of a sudden really just what's the word? Ignores that candle. Hey, maybe this was just a one-day wonder. Or maybe you could still be a buyer of Tesla. But the bottom line is this 488 to me will be the high of this week, and maybe even that might be the high of 2024. The way we know is how it trades today. If it gets rejected here, it goes red. That hey, maybe you got to be a lot more careful. If it doesn't, then some leaders are acting better. So that's just some of the thought process. Amazon, all these things look the same. Amazon broke 228. in my chart, if you're long Amazon for a move to take out 233, what does it have to do? It has to hold 228. It broke. That should have been your out. Stop should have went off everywhere for you if you're an active trader. If you've been in Amazon for 2 years, that's not the case. Anyway, let me say hello to some of my dogs around the world. See how you guys are doing. I have 32 comments right now. I've been kind of rude. Jose says hi from Caracas. Steve says hi from Massapequa. Sully says NVIDIA. Bobby 4.0, great job, Doug. That was an amazing call. You gave a gift. The FTEL blow up. I just want to keep my dog safe. Listen, I wish I could have stayed with this thing. I was telling you guys literally for, right into here. I'm like, guys, the chart looks good. Everyone's like, oh, look at the chart FTEL. I'm like, FTEL is a scam. There are these Chinese scam stocks where these, big investors from China, they manipulate this entire thing until all of a sudden they decide it's over. And there's been a bunch of these. So my friends make a living shorting these things. For me, it's just not my game. I like to be in control. I like to know my defined risk. And sometimes you could blow up beforehand. So yes, this is a scam. It went down to 7. And, people say it's going to $1. I would, but it was hard to be shorted if you did. But anyway, I'm glad you guys stayed out of it. And some guys made, millions of dollars short. That's just not my game. It's hard enough to trade, the names that have liquidity and defined. So anyway, so Amazon. Well, what would I be thinking on Amazon now? Chances are you could probably get a bounce back to 224. And then there, if people might try and short that. I'm just saying that's the way it goes. Now, are people going to short rallies? Could happen. So let's go back. So where is Amazon right now? Amazon is up at $2. It's at $222.50. So my thought process for Amazon would be like, okay, I have options on, which probably aren't going to work. If you were saying, hey, this is now a big bearish engulfing candle, which it is, which got me out of my longs. Now, what could you do? If you're playing a bounce, you could probably play to 224. If you're looking to see if it rolls over, 224 is resistance, and then 228. So the trade is changing now. If all of a sudden, it doesn't, can you look at Uber? Yeah, I can look at Uber. Uber looked better yesterday. But anyway, so basically I'm going to map out resistance 1, resistance 2 to see what kind of bounce we have back and everything. You could think this is just the process and the thought for today, and you could overlay it with it, whatever you're doing. So, for instance, Amazon would be 224, then 228. Meta would be probably 605, right? 605 is one spot. This is, right here, which it blew through. And then this is 616. If you were long Meta, which is what you always have to read the charts. I'm like, if you're playing Meta to take out 638 with a nice bull flag, it's got to hold 616. What did it do? It broke 616 yesterday. That was your route. Anyway, if you stayed with it, you stayed with it. If you've been an investor in Meta for a year or two, you're not trading actively for a living. So now what? So now if you're trading, here's Meta. Okay, Meta is up 7. That's a pretty big bounce. From 596 back to 604. Some guys would probably short this. It'll put a 15-minute high in. Anyone who didn't sell yesterday, like, oh, wow, oh my God, I can't believe I didn't sell yesterday. Went to 596. Now it's up 7 points. Oh, I could salvage 7 points. Let me sell it. That's why people sell a bounce after a big down day, and maybe it rolls over. Let me try out Palantir for you. Palantir kind of held it a little bit, very choppy here. I wouldn't be in a rush to buy Palantir. It's definitely stronger than everything else. It's up $1.24. I think, it's impressive. This is kind of gave me some reasons. Remember, like Reddit, Palantir, and Dash are all like the super growth names that are getting very loose and wide. So it's giving me some caution on Mag 7 besides the AD lines being horrible and every other stock out there. I would say if you're still in this, this is where you want to put your stop. Put your stop right here at this low. I think it's very impressive that this held. So, leadership-wise, Palantir is still a leader. Tesla's still a leader. Reddit wasn't so horrible either. Reddit just got below the 8 day, but you got to be a little careful. The low here is what, 157.75. This was what people had as their stop. What's Reddit doing this morning? Reddit is up 280, so this is still okay. I would reduce a little bit, just because Dash was bad. Dash, but Dash gave you signals. I was talking to my friends who have the institutional money, who have been in this sincere. I said, guys, I'm like, guys, I understand you make millions and you manage billions. I'm like, but Reddit flashed a little sell signal. It flashed a sell signal When it went to the highs and came back below, we know what that is. The sell signal is a red dog reversal. So here is your sell signal. Not blaring, loose and wide, very choppy. This I know got me on alert. And then I sold out. I got stopped out at 173. Why? Because it was below this inside range, below the 21 day. I saved myself 8 points. So if you have 1,000 shares of Dash and you got out because you're active and you trade for a living, you saved yourself 8 points of pain, besides buying more on the way down and losing more besides what you had. So things change. And my job is to teach you how to, approach these things when they change. Mr. I told you guys, Mr. hasn't been acting well. Mr. They've sold strength every single time. I think Saylor's, he's a smart guy. He's a billionaire. A lot of people made a lot of money in crypto and these things. But, I told you guys, be careful. I had this into Monday and I sold everything out. Why? Here's first your outside day, Mr. Remember that? You couldn't fail to hold, right? Get above and stay above. Did it do it? No. Then here, double top at 453. Then this was coming into them being added to the NASDAQ 100. I was in MSTX. It was up nicely, sold it. They sold strength again. Then it broke the 8-day. Then it broke the 21-day. This trend is broken. It's broken. I don't care. I'm just saying, and now it's probably up a little bit because crypto's up a little bit. Where's Mr. right now? It's up 17 at 367. So this is 363. This low is what? 386. I would not be buying this open to Mr. If anything, if you some guys might short it, some guys, I don't know what you guys are going to do. Let me draw another line here, but Mr. This outside day never took back more than 50%, so that stayed in control. Remember I told you this SMCI? I showed you the comparison. I'm like, remember when SMCI was fantastic and it had a huge move and everyone loved it and it was on above the 8 and 21 day, then it went sideways. They were selling strength this entire time before it broke. I'm not saying this is going to happen to Mr., but it was a good comparison, And now let's get back to Mr. here. So Mr. has been hard, okay? Everyone started to get like, Mr. Mr. Shaded rose-colored glasses. I would say I'd rather see you sell the open than buy the open in this. But it's already above 363, so I would say 386 is probably a spot, or the 21-day, which is like 375. So again, this one's been down for 3 days, so it might be a little bit bouncier. But again, the trade changes. The trade always changes. Here it was awesome. It was the momentum was locked in. Shorts were caught, and then it all basically got on the distribution then there. Bitcoin itself. What about space companies? It all depends. It depends if yesterday was the day that they just wiped out all the excess fluff, and then now we grind back and the volatility gets constricted and we go up a little bit here, a little bit there. And it depends on how fast things rebuild themselves. Can anything work? Could the little guys work in the next week or two while the indices head lower? Or was yesterday the low of this move? We don't know. Everyone's asking questions. What's next? What's next? What's next? I'm telling you how to figure out what's next. What type of bounce do we have over the next 2 days? Is there an appetite for stocks down here in risk? How do the leaders react? Do the stocks that are still above the 8-day all of a sudden start to show relative weakness and break yesterday's low while the indices don't? So these are all the things you have to think about to figure out what's next and what is worthy of your risk capital. IBIT also, filled the gap. And it's still above the 21-day, but at the 8-day, I still have some on. I still have some leftover options on, but I'm in careful mode. The trade changed for me. I'm not going to be in the 20 names. I'm not massaging things for higher lows and higher highs. Now I'm playing ranges. I'm going to be playing with Conrad here. Conrad has been trading for a bunch of years. He's 20 years old. He's day trading and figuring out how to play levels and make money each day. I'm going to figure out how to make some money each day based on the open, based on the ranges, and based on what groups I'm trading, until the market gives me more confidence that I know what the next direction is, because it's hard to know what the next direction is here. The S&P is still up, 23% on the year. Is it going to close up 17% on the year, or is it going to close up 1 or 2% higher from here? It's a guess. And if anyone has a strong opinion, okay, be careful, because usually strong opinions is what gets you in trouble, not having multiple plans and mapping out levels and having a routine and a process to figure out what's next. Yes, it's kind of sniper mode, Bobby. It's low risk. And I've been saying I want to play defense for like a week. I'm like, I'm at the highs of my year. My hair, the AD lines are crap. Some things are extended. I'm trying to do less, and still, where I lost the majority of my money yesterday is I was buying the SPYs into this area, and then there was just no bids. So I actually didn't sell the bottom, but into the move back up, I reduced a little bit. And if you have 15 names on, and even if you only have a third left, like I sell into strength, I book profits, the whole 9 yards. But if you have 10 things left and everything is down a lot, and you have a third of a trailer on, and you have 10 trailers that should be sold, which is what I did yesterday, those 10 trailers add up to money. So, it's a cost of doing business. There's always a cost of doing business. I did have some hedges on that help, but anyway, you never have enough. So here we are. That was then. This is now. We're going to move forward. The trade changes. The trade's been changing for me for 30 years. Changes usually 10, 12 times a year. And yesterday changed the trade. Did you react? Were you fast? Was your mind right to execute on the X's and O's? That's one thing you can't control, is how your mind is doing, what you're doing in the morning to prepare, and how you're situated. And that's what we're going to work on in 2025. All right, guys. Good luck today. I appreciate you.